So when we put together a portfolio, you're going to be looking at usually a blend of all three of these different models. And that means that you're going to have different components doing different things. So the goal long term is to have all of these things fully invested as long as possible. So you could have, say, we're doing a 50% bond stock target. You would always be, the goal is to be 50% in. But let's say the trends start changing in the stock market longer term. You might see that growth model take money off the table. And then you're going to be sitting there with some of the money over in bonds and some in stocks. But maybe the dynamic models are still saying the economy's fine. So you're going to be fully invested there. But as that starts turning around and you go to the bearish mode, you're going to take half the money off the table there, and then same way on tactical bond, you might go from being 100% in high yield bonds all the way there. So your portfolio mixture, if this being money markets and low risk bonds and this being stocks, can change a lot over time. And that's how SEM will manage the cycles of the market. Is we might start seeing tactical bond buy first, and it might go in half, and then the other half, and then maybe the economy starts to look a little bit better, and then maybe the trends start turning around, but you might see them going in opposite directions. So you're going to have three distinct components all acting separately to give our clients a well diversified portfolio. And the reason we do this comes right down to behavioral finance. We know that regardless of the objective and time horizon, that human nature says we want to do something when things start to get painful. And so by having this three-pronged approach to investing, you allow your portfolio to do things before you're even aware that things are getting bad. So hopefully that made sense. Make sure you check us out. Follow us on social media for a lot more updates on what's happening currently in the stock market and how our allocations are adjusting.